For the day, all 10 economic sectors in the market posted a loss. Let me pull up XLE real quick, and this is energy. Anyway, energy posted a 9.4% loss. I'm going to use another ETF for tech, and tech was down 6.8%. And here's another ETF for commodities. Commodities were down 4.8%. Crude, and I'll use X oil here. This is light sweet crude. Was down 9.3%. The worst decline that we saw today was in financials, and financials on the whole. This is the XLF, the ETF for financials, but financials on the whole were down 15.9%. The best performing sector, and I'm going to use another ETF for that, was consumer staples. They came in at 4.2% down. So at 4.2% on any other day, that's a huge, huge loss. On today, that was the best performing sector. Let me pull up the Dow 30 again. On the New York Stock Exchange, all NYSE stocks, advancers versus decliners, are actually decliners outpaced advancers 55 to 1. So for every one stock that advanced, 55 stocks declined in the New York Stock Exchange. The international markets didn't fare well either. The MSCI World Index is an index of 23 international markets that dropped 6%, which is the worst decline it's seen since its inception, I think about 1970. As I mentioned on the blog, in quotes here, while we are closer to a bottom, there remains significant downside over the next 6 months. We saw, I guess it was almost prophetic, but we saw that significant downside today. In today's contributor letter, one of them at 3 p.m., I said that this must be resolved and fast. The Fed won't be able to pump enough money in to keep the LIBOR rate down. I also said, when there's blood in the streets, it's time to be a cautious buyer. So instinctively, people are selling when we see days like this. But like I showed you with this indicator, we're seeing actual longer-term accumulation, and there it is on a half-hour chart. So there are buyers out there that are picking up. For every seller is a buyer, more or less. So there are buyers out there, and it looks like they're accumulating. So blood in the streets, time to be a buyer. According to the New York Times, there will be a second attempt to pass the bill. CNBC contradicted that statement, saying there will not be a second vote. In any case, the House is adjourned, and I think that's until Thursday in observance of the Jewish holidays. Here's a rundown of the last 6 months. I just want to give this to you real quick. In March, the government forced the sale of Bear Stearns to J.P. Morgan. Indy Mac failed in July. Fannie Mae and Freddie Mac were put under conservatorship in early September. Merrill Lynch was bought by the Bank of America, and Lehman declared the largest bankruptcy in history, and then the government injected $85 billion into the insurer AIG. Days later, the government seized Washington Mutual, which was the largest bank failure in U.S. history. Their assets were bought by J.P. Morgan for only $1.9 billion, and now it's Wachovia's turn. So like I said, every day that this thing drags on, we're going to see another bank or another financial institution fall by the wayside. So these politicians really need to get it together and fast, because this market still has significant downside. Here's the Dow. We're looking at a 5-day chart, and if we just pull up a head and shoulders pattern here at 11,000, it's called 11,700, and then I take roughly a high over here of let's call it 14,000, and if we take those numbers, we end up with a targeted downside of about 2,300 points. And 2,300 points would put the Dow from that neckline that we identified, 11,700, at 8,400. So we're talking about potential. We're looking at the Dow now on a 5-day chart, potential downside somewhere around here. So we're looking at a lot more downside potentially. So the government needs to move and move fast. So check out the website at tradeguild.net. At the end of the video, you'll see the link. And if you're interested in either trying out the 3C indicator, which I use, it's my own indicator that I wrote for accumulation distribution, or if you want to get involved with the contributors letter, which went out 5 times today, with ideas and warnings and everything else, then just go ahead and shoot me an email and I'll get you hooked up. So for now, this is Brent from TradeGuild.net.